off of that reversal level and then a retest. So it's the market kind of saying like, I'm diving down. Oh, I hit something. Buyers are interested. Sellers are like, no, we're gonna keep this thing rolling. Oh, I hit it again. And then we see it move, right? For me, that's a double bottom. This, something like this, is not a double bottom for me. So I look at this as being a continuation setup, right? Because we've come down to a level. I don't know, why is my thing not working today? We come down to a level of exhaustion. We reverse. The buyers have a good, they've got good possession right here. Right? They're able to take control of the market. The selling pressure's gone. The buyers push it up. They have a pretty nice run. And then that run is over, just like in a normal trend. And then price continues down. So this is more of a retracement, right? Versus we wouldn't necessarily look at this as a retracement because it's shallow. So for me, it's two different things. And again, as a trader, and I don't know where all of you guys stand on the topic, this is something that you're going to have to debate and decide. How deep of a retracement is too deep, right? I mean, would something like this be a double bottom or a double top as well if price comes all the way like that? Are these double tops and double bottoms or not? Right? That's something you have to decide in order to be consistent. What helped me was, and one of the reasons that I put in rules is because at the time I was trend trading and counter trend trading at the same time. So the dilemma that I ran into was this. I was trading a setup called the Fibonacci failure setup, where price would extend. I would draw out a Fibonacci right here. I would look for a 382 Fibonacci retracement. It had to come to the 382, and it couldn't go beyond the 618, right? Stop loss was 10 pips above the 618. Funny how I remember these strategies, right? And then I would look to, let's say it didn't hit exactly or something like that. And then I would look to sell it for the extension, right? Typical pullback trading strategy, right? No fancy bells or whistle, just a fib and a fib and some price action, right? I was also a counter trend trader at the time, so I was trading double bottoms and stuff like that. So you can imagine in almost every scenario like this, there is a problem, because I may not be a genius here. You might need to correct me on here, but it is impossible to get here without going past here. I don't know if that's still true. It used to be that way. But in order to get here, we had to get here. Right? And many of the time, as markets would do, right? Sometimes we blew right through, right? Love those trades. Pain-free. Sometimes we blew right through, right? 60% of the time, all the time, right? I need some Panther spray. It was Panther spray, right? Is that what it was? Panther cologne? I keep wanting to say Black Panther cologne. Was it like Panther cologne? Oh, it's a classic movie. I'll tell you what, Anchorman, the fight scene, it's got to be one of the greatest all-time movie scenes ever. It's pure mayhem. I think it killed the man. Yeah. Anyway, so we would have scenarios where price would get here. And keep in mind, I'm a trend continuation trader, so I'm short here. But I'm also a counter trend trader. So this is a double bottom for me. I'm supposed to get long here. So now the magic question is, what do I do, guys? And this is younger trader before I had rules, but I wasn't kind of as in my rules as I should have been. I was still kind of highly emotionally driven and whatnot. So what do? Do I stick with my short? But now I'm getting an opposite signal, and this is screaming double bottom. Do I get out of my short? And do I take the double bottom? and get long, I don't want to exit my short early because early profit taking is bad, right? But I don't want to miss an opportunity because skipping trades is bad. What do I do? And I would typically rely on recency bias. I actually just did a podcast about this the other day. In fact, I think it came out today or yesterday, whenever it scheduled it. But talking about recency bias, where my current trade would be based off of the previous trade. So if the previous trade blew through, right? If the previous trade blew through, I would stick with the trend continuation because the last trade did it, so this one has to do it too, of course, right? If the previous trade stopped and reversed, then I would get out of my trade and I would enter the double bottom because the last trade did it, so this one has to too. And you can see really quickly there's no consistency, right? Is there any benefit of judging your current trade based off the past result? Hell no, right? There's no benefit of it. So there was no consistency. So what I had to do is I had to develop rules. Either I had to choose one or the other. Or I had to develop rules on how deep of a retracement was too deep to be considered a double bottom. And then vice versa for the trend continuation trade, right? So that's where I got those rules for double bottoms where it's like, hey, if it goes past this level or hits this previous level of structure, it is no longer a double bottom for me because I see it as a trend continuation move. Because again, the expectation of a double bottom, right? Just like we spoke about in the first trade, right? The expectation of a double bottom, are we expecting it to clear all the way up here? Are we expecting a continuation in the opposite direction here? No, we're not, right? We're expecting a little bit of relief. So our job as traders is saying, okay, well, where is that relief going to come to? Well, we have a Fibonacci zone, we have, previous structure, we can have volume, whatever we have in there, we do our analysis, but we're not expecting it to come here. This is a counter trend scenario, so we're probably expecting just relief to come here, a quick in and out. So if price has come here already, and then has come back down here, just like in our first trade of the day, are we expecting price to come here again? Question mark? Something to ponder, right? Something to ponder. And there's no wrong or right answer, guys. It's going to be up to you as a trader. I'm not here to tell you that you have to do it in one way or another. I've my whole entire coaching career, for better or for worse, I know some of you guys like just being told yes or no. But I don't believe that in trading. Again, just like the last podcast episode on, I think it was the one I released on space and trend and how there's no true trend and how it's all fractal related. And we can have, someone said this, Toby said this on YouTube. He said, perspective is subjective. Ooh, that sounds good. Make it a t-shirt. Perspective is subjective because we can take 10 of us in here. We can all look at the same pair and we may have 10 different answers. Maybe we can't have 10 different answers, but we may have 5 different answers on what we're seeing as far as like bullish, bearish, consolidation, directional, all based on how far we've zoomed out on the chart, all based on what our rules are, what we value, right? So I never want to tell you guys that you're wrong, but I do want to feed you information and experience that makes you think and allows you to develop rules the way that most fits what you, I don't want to say want to see, but what you naturally believe in. But ultimately, you guys are going to have to make the decision on how you judge this and what those rules are. And it may change over time. That's okay, right? We're allowed to adjust over time, but you got to make a decision. So that's why it's not a double bottom, but mainly it doesn't meet the rules. we don't retrace deep enough, so we can't even have this debate. But good stuff. All right, if you guys like what you saw and you want to join us for live action and live discussion on a daily basis, make sure you check out our New York and London live rooms. They're both available with your 14-day risk-free trial membership over at www.tier1trading.com. Risk-free is exactly what it sounds like. No sneaky sales, no auto bill, no anything like that. Just 14 days on the platform, in the live sessions, taking courses, interacting with our community, downloading software, and just working on growing growing and building yourself as a trader. So 14-day risk-free trial membership, www.tier1trading.com. See you there.